Let's pause for a reality check. BINI stock, once Mullen Automotive, is today trading at just 3.5 cents per share, after a brutal 16% drop during Friday's session and another 11% loss in the aftermarket. That brings the post-market price perilously close to 3.1 cents. With the 142.50 reverse split scheduled for Monday, the implied price per split share dives to around $8.75, but don't be fooled. The valuation is still deeply distressed, undermining any notion that this is a comeback story. So why does this weekend matter? This isn't just another drop. Friday's behavior reveals eroding confidence even as the corporate rebrand to Bollinger Innovations, ticker BINI, moves ahead. The cascading losses expose any residual belief in management's ability to steer this company toward sustainable value. Over the past week, we've seen a confirmation of a 142.50 reverse split effective August 4th. Continued absence of SEC filings confirming that split or disclosing shareholder vote results. Persistent opacity around capital structure. Press releases alone claim elimination of debt, but no 8K filings to validate. Residual dilution from equity raises likely resulted in a market cap still arrested near $15 million, far below the $35 million Nasdaq threshold. What reverse split math doesn't capture? If you do the math, 3.5 cent times 250, you get roughly $8.75. It sounds decent in pickup line math, but it ignores two things. Investor sentiment. Friday's 16% crash followed by another 11% in aftermarket trading suggests that shareholder confidence is evaporating faster than gum on hot pavement. A one-time price bump via reverse split won't reverse that sentiment. Nasdaq market cap rule. Listing isn't just about hitting $1 a share, even at $8.75. If the company has floated more than 1.9 million split shares, it still won't meet the $35 million requirement. With recent equity dilution, warrant elimination, and hint at share creation, market cap remains dangerously low. What corporate governance is hiding? Let's recap what we know, and what we don't. On July 8th, Mullen filed Form 14A asking shareholders to approve a reverse split of up to 142.50 and authorize conversion of convertible notes and warrants. That vote supposedly occurred July 26th, but there has never been an 8K or other SEC filing confirming the outcome. The company claims in a press release that it eliminated $25.3 million in convertible debt and warrants, but again, no file documentation, no equity structure changes disclosed. The rebrand, name, ticker, and QZIP, completed July 28th with no SEC filing under the BINI name, all changes still filed under MULN. The company's website appears scrubbed, financials, press releases, and filings older than July have disappeared from Mullen's archives. This pattern is consistent. Mullen Bollinger has made multiple reverse splits in less than a year, and each one has been accompanied more by confusion than clarity. The 142.50 now incoming feels less like a recapitalization and more like a last desperate attempt to reset optics, not fundamentals. What happens post-split? Monday morning, the reverse split will take effect. Anyone holding 250 shares will see one share credited in their account. That share is theoretically worth around $8, but with last week's volatility, it may open closer to $6 or $7. Then what? In short, the collapse likely resumes. After the previous 1-for-100 split in June, the stock again bled toward 5 cents within days. The corporate narrative never caught up. The same management, same dilution cycles, same elusive equity structure remains. Friday's evening downfall suggests traders are expecting the split poison. The mechanics of reverse splits almost always cause forced selling. Brokers often issue warnings. Investors who hold fractional shares or can't trade before market open find themselves wiped out. Meanwhile, institutional liquidity remains absent. Retail holds the bag. What happens if BINI fails Nasdaq compliance? If BINI fails to maintain a $35 million market cap for 10 consecutive trading days before August 26th, then Nasdaq will delist the stock. That doesn't mean bankruptcy, but it does mean a shift to OTC markets, where liquidity is minimal and spreads widen. Brokers may restrict trading, effectively making your shares hard or impossible to sell. Investor confidence collapses further. Regulatory oversight weakens, fewer reporting requirements, less transparency. Potential legal complexities, especially for retail investors who bought under ticker MULN. Temporarily, a reverse split might produce a per-share price that looks compliant, but if the underlying valuation doesn't change, the status remains at risk. Should anyone still hold BINI? Real talk, this is the kind of stock that should have been sold months ago by anyone who wasn't engaged in day trading or blatant speculation. The fundamental operations, vehicle orders, revenue inflows, manufacturing scale, have not materialized. Instead, management has leaned on reverse splits, press-only debt elimination announcements, and constant ticker name refreshes to stay alive. If you believed in Mullen's EV potential in early 2023, that hope has been replaced by historical debt cycles, shareholder dilution, and regulatory teetering. Here's where humor helps more than hope. Now, I said earlier there is only one consistent trade in BINI. Let me repeat, the only trade this stock reliably offers is shorting it post-split. If you've lost money holding, you have no ethical blowback from joking that shorting might be the only way to recover, because Mullen Bollinger has never delivered value. Only destruction. I'm joking, but only halfway. This is not financial advice, and shorting has its own risks and margin requirements. But look at the performance. Every reverse split spikes the price, briefly. And within days, it collapses again. That's a machine. What watchers should do this weekend? Review your holding. Can you survive $0.041 times outstanding shares $2.50 per share? Watch for SEC filing Sunday evening, Edgar. There should be an 8K about the split, share structure, or warrant elimination. If it doesn't appear, that's another red flag. Check market cap coverage Monday. Post-split cap should still be less than or equal to $30.35 unless share count soared. Listen for updates around August 26 compliance. Any delay or extension would mean something bigger is happening behind closed doors. Final thought. This entire saga feels less like a turnaround and more like a final spin of the roulette wheel. BINI is not building bridges. It's setting itself up for an exit, just not the kind shareholders signed up for. If management had any real plan, legitimate contracts, manufacturing scale, legitimate revenue, they'd show it. But until we see audited statements, independent confirmations, or insider equity disclosures, the rebrand is meaningless. A 3.5-cent stock. A 1-4-2-50 split. $15 million market cap. Nasdaq at risk. Impossible to trust. This weekend may not change much, but it amplifies one truth. Beyond Monday's split, there's nowhere to go but down.